Lightning like Steve McQueen. I'm in the fast lane when the light turns green. And I built tough, I ain't nothing but grit. Cause I made rugged blood, sweat, and spit. Yeah, like a horse I fly. Better push yourself in for a bumpy ride. I like to play hard, but I work harder. And I weather the storm cause I'm built stronger.
What is up, ladies and gentlemen? We are back. We are live. It is the Freight Coach Morning Show, the top morning show in transportation, coming to you guys every single weekday. 8:30 a.m. Pacific, 10:30 Central, to break down some industry headlines and, most importantly, provide some actual insight into what you can do with all of this information. If this is your first time tuning in, welcome. This is the real side of freight, ladies and gentlemen. And I say that before every single show. And what I mean by that is I only speak to transportation professionals on this show, as well as my twice-a-week long-form podcast, because I only talk to the right individuals who have done what you're looking to do or who are currently doing what you're trying to achieve. So you can take that information, apply it, utilize it, and see a meaningful difference in your business and your life. It's one of the many, many reasons why I proudly fly that American flag behind me every single day. A, we're the greatest nation on earth, but B, I'm living my American dream, and I want to help each and every one of you live yours as well. All right, Flo, good morning to you. Bill McIntyre over on YouTube. Good morning to you. Tracy St. Clair, good morning. Technical difficulties this morning, you guys. I don't know why the stream wasn't created or it didn't come through. And then my computer just like fell apart essentially right before I started to go live there. So I had to create a brand new event and everything. But we're back. You guys, we're here. We're making it happen on this glorious Wednesday morning. Let me see here. What do we got going on today? So yesterday, I know everybody's new. If you're on LinkedIn or, social media in the industry, obviously you see the amount of people talking about or like posting at Manifest and everything else that's going on up there in Las Vegas right now. And I actually flew up there yesterday to see some of my advertisers, right? And they were all under the same roof. And I was talking to my friends over at Denim, and B, their CEO, was like, "Hey, let's meet up," because he thought I was in town for that. And, it's only about a 40-minute flight here from Phoenix. So I just flew up and, went and hung out there for a few hours yesterday. And I mean, the place is massive. Like this conference is huge. And I'm looking at it though, if you're in there, depending on the stage of your business, right? Like if you're out there looking for new technology or whatever that looks like, it's a great event for you to go to. But if you're trying to go up there to think like you're going to develop customers and like shippers and stuff like that, I don't think that that's necessarily the place for you. I will say this: no matter what, get in front of people, meet with people in person. It just proved it even more. Being able to meet up with my my advertisers that were all there and being able to spend time with them, and you just can't replace that, right? You can't replace that human to human interaction that you can get in the relationships that you're able to solidify in when you're in the same room with people, right? So I think that from my perspective, you just got to get out there and get in front of as many people as possible. And if you're feeling FOMO from seeing everybody posting about being at Manifest and everything, if you are in the market for like technology and stuff like that and looking at it, that might be a good spot for you to go to next year. But if you're looking to develop business and you're looking for shippers and everything else, I don't think that it necessarily is the best environment at any conference. I think that from the most part, most shippers who are at conferences are there for a reason, right? And they're there for their companies. And I think prospecting people at a conference like that, it's just not my style. I think that if you're going to go to because like there was a roofing show that that was in Las Vegas this week, and we actually delivered some stuff into that roofing show for a customer of ours. And I think from a business development strategy, maybe seeing what is new in the niche that you run, right? Like, is there any new technologies or is there any new product launches that some of your prospects are doing? Are they showcasing at some of these events? I think it'd be cool to go learn more about them, because generally, if it's going to set a trend, other people are going to start offering a similar service or product, right? So I think from a that standpoint, I think it'd be, it's good to go out there to some of these trade shows. But I think if you're just going to like try and like develop business and like cold call, like cold prospect and stuff, it's just not for me. I honestly don't think it is. And it never will be. I want to be in front of people. I want to go visit them at their facilities and stuff like that. But I think that that's one of those that is that, like, again, that's just my business development strategy. I don't think walking around a show floor at a conference like that is going to be the best way to find shippers by any stretch of the imagination out there. But it is also one of those things that dude, because like coming back, my flight got delayed out of Vegas, and this is, again, this is the I saw a clip this morning that Ed Milet posted about taking the hard path and everything and going through entrepreneurship and business and stuff. And it was like my flight got delayed last night. I ended up not even getting back home till 11 o'clock last night, which is extremely late for me because I'm usually in bed by like 8 because I'm a very early riser. And, I knew that this week was going to be tight from a time perspective. And then especially because I'm in the middle of 75 hard right now as well. So it's like, I got to get my shit done no matter what. And, I got everything done prior to leaving to go up to Vegas last night. And then like, I knew today was going to be challenging, right? Because like, I couldn't let my routine fall behind. And, again, this is a lot of, creating that discipline to hold yourself accountable in the sales perspective and the business development perspective as well. That, I got home, went to bed right away. And then 4 short hours later, alarm went off, got up at 3 o'clock this morning, went into the gym, got my workout done. And, again, it sucked. Today is going to be rough. I'm going to drink a ton of coffee today and everything, but it's the discipline that's required. Right. And it's from one of those things, like, this is what I hoped for. I hoped and prayed for the opportunity that I got yesterday just to go up and see my advertisers, right? When I first started and then even going through all of this. And it's like, when you build that stuff up and you get those opportunities, like that's the sacrifice that you need to, the sacrifice of the time away from your family, getting up, working tired, but most importantly, holding yourself accountable. Because I still got all my sales outreach done this morning. As soon as I got in, I still got all that done. I'm still getting my tasks done. I'm tired, but tomorrow, if I, I'll go to bed early tonight, right? I'll make up for it. And that's just what you need to do. Because if you're not willing to do it, somebody else is, truly. It's the same thing in freight. It's the same thing with anything. If you're not willing to make that sacrifice, if you're not willing to put in that work to get those results, somebody else is going to do it. And that is going to be very challenging for a lot of people to look back and think, like, because it's not going to be easy, right? And I'm saying this again because, like, some of the articles that we're going to be breaking down, again, it's about the market. Everybody wants to talk about the market. Everybody wants to talk about, like, when's things going to change, but it's like, what are you doing today? Are you just waiting for these opportunities that you think are just going to miraculously show up if you, like, when the market changes, when things switch up? It's literally what you're doing, the sacrifices that you're paying day in and day out that lead to those results. Because again, who are these people when you're reaching out to customers and shippers and everything else under the sun, who are they going to respond to? Are they going to respond to the individuals who just started prospecting them, or are they going to reach out to the individuals that have been prospecting them effectively for the last 15 months, right? Like, I got a sales email. Again, this is how lazy people are. And this is your competition out there, you guys. All right. Keep this in mind. This is your competition out there. People are so lazy. They send me emails soliciting me for freight. And it's everything under the sun. They do drayage, they do flatbed, they do reefer, they do air freight, they do dry van freight. If they're that lazy where they will just literally send out an email blast every single day to people, or every other day, or whatever that looks like, that's what you're up against. Okay. That laziness factor is rampant, you guys. It is rampant. So many people are looking for the path of least resistance. So many people are looking for that easy route that's out there. And if you put in and hold yourself accountable, again, be disciplined, do the right thing, prospect the right way, you're going to develop business here a lot sooner than a lot of people are. because there is no magic market shifting that everything's going to be all right and you're just going to start making all this money again. It's not going to happen. It's not at all. And it's very, very challenging to go out there and like there is no wake up and things are going to miraculously better. I personally think, again, this is pure speculation from my part. And again, take it for what it's worth, you guys. I'm actually booking freight every single day. The market I think the biggest indicator that the market has shifted and is shifting has everything to do with the negotiation factor of carriers. And I know I kind of briefly talked about this the other day, but there is a lot more pushback. There's a lot more, we're holding firm at X price. And all the data that's out there is lower, right? If you go and look at some of these, the past forecasts of some sites that have, 30-day, 60-day stuff like that, their data is significantly lower than what freight is actually moving for, right? Like there's lanes that we've moved that were all the data was saying, for example, $1,000, and every carrier we talked to was at 1,800. They were not moving. They were not budging on it. $1,800 was the rate. And that's what we ended up moving some of that freight for, right? So I think that that's the biggest indicator that's out there. Cause I know that, you're going to see a lot of conflicting reports coming out here about where rates are, how things are going out there in the market. And it just shows how old some of their data actually is compared to what is actually happening in the market. All right. So keep that in mind. All right. Keep that in mind out there. I personally think that, as I had mentioned and put out there, the market is going to shift like this. Like it's going to be, if you were moving a lane at $1,000 and then there was an event and it jumped up to 1,500, like the weather event that happened out there a couple weeks back, and it's not going to drop back down to $1,000. It's going to probably sit at like 1,250. And then it's going to sit there for a little bit until the next weather event or the next event happens. And then boom, it's going to spike up to 1,700. And then it's going to drop back down to like 1,400. And then people are not going to move off of that. That's how I predict this rates. That's literally how I predict that the market is going to react this year and shift this year and grow to truly be a flip. I don't think it's going to be a cataclysmic rise or anything like that. But I think that the signs are definitely out there, at least from the freight that I'm moving. All right. So take that for what it's worth. All right, you guys, let's break down. Jamie, what is up? Good morning, coach. The market has bbeen good to you lately, she says. The market has been good to me lately, she said. I like it. Good for you, Jamie. Keep stacking. Keep moving freight. Keep making those customers happy. All right, you guys. First article we are going to break down is from actually the JOC, and that is stressed U.S. truckload market searching for elusive turning point. I think it's already here. I truly do. I could be quick to the party. I don't care, but I truly think it's here. Smaller trucking firms are leaving the market at a faster pace in early 2024 as the cost of insurance and truck maintenance overwhelm their budgets. But these exits have tightened capacity to a degree that affects spot pricing, which hasn't climbed much from the bottom it reached last summer. What trucking needs is higher freight demand, carrier executives said during fourth quarter earnings calls. The market is stressed, said David Jackson, the president of Knight Swift. You've seen small carrier rates. They've hit the bottom, Jackson told Wall Street analysts. It doesn't take a lot of creativity to understand where this can go from here. The JOC averaged unweighted shippers paid spot rate climbed to $249 a mile in January from $242 in December. Still, the average dry van rate last month was flat, with July averaging down from $280 a mile a year ago. The rates are based on data from Cargo Chief, DAT, LoadSmart, and industry surveys. The average rate carriers are paid excluding fuel had been much lower at $1.65 a mile, excluding fuel in February to date, the same as in December and last June, according to DAT. Small carriers across the landscape are leaving the market in rapid fashion, said Joe Beacom, is the Chief Safety and Operations Officer for Landstar. But drivers and small carriers may come back to the market as quickly as they leave. They'll continue to look for opportunities to come back in when the freight market improves and we kind of move our way out of this, as we kind of move our way out of this freight recession. I think it's very common, right? I mean, when rates increase, and this isn't anything, whether, it be real estate, anything like that. When rates start to increase, everybody floods. Everybody's a mortgage broker. Everybody's a realtor, just like everyone's a freight broker, or everyone's going to go in and try and start a trucking company when the market's hot because things are perceived easy at that time. And that's why so many people look for it. But I think that one thing is good to know. And I'm trying to lock in a guest for next week to really explain some of this data at a little bit more in depth for us all. But it also goes on to say siphoning the surplus, tracking and measuring the carrier exodus, and gauging its market impact is, difficult. Net revocations out there from the DOT have been higher than 6,000 a month since April of 2022 and totaled almost 6,900 in November, down 550 from October. But the excess capacity does linger. Although 22,000 trucking companies abandoned or lost their operating authority in 2023, according to DOT data, there were still 31,000 more operating authorities on the books at the end of last year than in 2021. That followed a 66% increase in operating authorities from 2019 to 2022. The single best reason for owner-operators' departure in full year 2023 was maintenance costs and the inability to make repairs, said Jeff Beacom with Landstar. About 20% of those carriers that left Landstar's network cited maintenance costs as the main reason they were going to the sidelines. And higher insurance costs are also squeezing carriers out there in the market. I think that's, it's a very real thing, right? And that's where, again, I follow Adam Wingfield. If you're a driver, if you're an owner operator and you're listening to this show, follow Adam Wingfield with Innovative Logistics. He talks about this, right? He talks about knowing your numbers. He has, a plenty of stuff that's out there and plenty of resources out there for you to help you run a more profitable trucking company, because it is one of those things that is going to take out most businesses, right? And it's not just trucking companies. If you don't have cash on hand for issues, that's what puts you in a corner, and then it's again, I literally just released a podcast yesterday with my CPA, Joe Harding. And we talk about this in that show. We talk about people who are not setting aside rainy day funds, who are not setting aside money. And this isn't just a trucking thing. This is a small business. This is an entrepreneurship thing. This is a lot of learning the hard ways, because when times are good or not understanding how your finances work, you get in a very tough predicament. And I get it. I've made those mistakes, right? I went from when I started my business, not making any money, like really getting down, like I was working, delivering pizzas to make sure I put food on the table still, because I had wiped out my entire savings account. I had cashed out pretty much all of my 401k when I had first started, which I still haven't recouped to this point, but it was challenging, right? And then the more challenging part of business is when you start making money. All right. It really is. It's not when you don't have any money, at least from my perspective. When you don't have any money, it's significantly less challenging of when you start making money, because you remember how desperate you were to make money. And then you start making money, and then you're grossing $10, $12, $20, $30,000 a month. And you think it's always going to be like that. And then on top of that, you don't set aside money for taxes. You don't put stuff in savings. You don't have a rainy day fund. And then boom, something happens, whether it be a breakdown or, maybe you have a customer who doesn't pay you or something like that. And then you're on the hook, right? Because you might be getting $30,000 in receivables, but then you get, you got 15, 20 grand in payables every single month coming out, and you're not setting aside money. You're making 30,000, you're spending 30,000. And then boom, you get a customer who stops paying you, and then you got 20 grand due the next day. And then there's just stuff that pops up, and then you're out of business really quick, or you can't pay your taxes, and then you stretch it out, and then you get charged interest, and then you're constantly in a hole and everything. Financial literacy. I'm telling you guys, work with a CPA, work with a bookkeeper, get in there. Listen to that episode that I had with Joe Harding on yesterday, that I released yesterday out there, you guys. It's going to help keep you in business, right? Because again, so many people are waiting for the market to change, but they're not looking at how can they run a more profitable business, because the market's going to flip eventually, right? But your bad financial habits will follow you. Okay. Yeah. You might make some money. You might put a little bit of money away, but if you're not planning for the next market downturn, because it's going to happen, you're going to be in another downturn here if you're going to be in this long term. So keep that in mind. Okay. Keep that in mind out there because you got to learn to run. It's very tough to switch from that employee to owner mindset. It really is. But you got to go through stuff. You got to get your teeth kicked in a few times, and then you will have a clearer understanding about how to attack the next market uptick and then the next market downturn as well. That article stressed U.S. truckload market searching for elusive turning point from the JOC. Next article. This one is actually from FreightWaves, and it is about Werner reports Q4 miss. 92.5 adjusted truckload operating ratio, worst of cycle. I chose this one, you guys, because success leaves clues. And following what some of these larger carriers do is what helps you out a lot, right? Because, again, we were talking about this when the market was up and then, people liquidating equipment and you just kind of how like they're like, pay attention to these strategies, right? Like these are billion-dollar companies and the way that they operate, you might be like, how does this equate to my small multi-six-figure business? And there are a lot of synergies that are out there. Warner saw another tough quarter to close out 2023. The company's 2024 guidance calls for total truck count to be down 3% to flat, noting that one-way truckload market is uninvestable at the current moment as rates continue to be pressured by excess capacity. The one-way segment saw an 11% year-over-year decline in averaging trucks in service to 2,929 units during the fourth quarter. Average trucks in use on the dedicated side were off just 3% to 5,239, as some customers have reduced the number of trucks needed on a daily basis. We're not going to continue to run a network in one way at the return levels that we are seeing today. We owe it to our shareholders and others to make sure that this isn't the case, said Derek Leathers, who is the CEO over there. The company achieved $43 million cost saving. The company achieved a $43 million cost savings run rate by the end of 2023 and had identified $40 million in new savings opportunities in 2024, of which only 15% overlap from the prior year. That was out there. Earnings per share 39 cents, 4 cents light of the consensus estimate, and 60 cents lower year over year. Compared to the 2023 fourth quarter, lower gains on sale were a 26-cent headwind out there. The company saw an 11% decline in the number of trucks sold, but a more than 60% increase in trailers sold. Much lower per unit gains were the culprit. Warner's dedicated business saw a revenue decline of 2% to $309 million. Revenue per truck per week was up 1%. The full 2024 outlook calls for utilization metric, to be flat to 3% higher. Warner's one-way segment reported a 12% year-over-year revenue decline to $178 million, and total truckload produced a 92.5 adjusted operating ratio, the inverse of operating margin. Out there, the logistics segment reported a 6% year-over-year increase in revenue to $227 million. That was out there, and the number was partially boosted by a brokerage acquisition last November. The segment was profitable, recording a 1.3% operating margin, which was 250 BPS worse year over year. I don't know what the BPS stands for, but let me see here. And they required Reed TMS last year out there. But yeah, it's, again, so what are they looking at here? They were talking about that the one-way business, that they're not going to continue to run a network in a one-way at the return levels that were out there, right? So again, that to me, I can't prove this or anything. It's just speculation based on that it has everything to do with their pricing structure and how they're going to work out with their customers. They might have put one-way rates out there thinking that the market was going to change, but now they're probably going to go in and change their pricing strategy and try and get more round-trip mile or round-trip rates and stuff like that. But it's going to be interesting to see, right? Because I think what a lot of people banked on, I truly do. I think a lot of people banked on bidding extremely low for all of their contracted rates going into this year in the anticipation that everybody bid low. Okay. And then when the market flips at a higher level, everybody rejects all their tenders and it's going to trigger a rebid. And then they're going to go in there, or they're going to try and make all their money on the spot market if the customer doesn't go into a rebid mentality if everybody starts rejecting higher tenders, which I've seen, right? But I've also seen the inverse of that, of where customers just kind of let everything go out in the spot market because they want the capacity. And as long as things are picking up and delivering, they'll be fine with that. But it's going to be interesting to see, right? I truly think that way. That article was from Freightwaves, and that was about Warner reporting a Q4 miss out there. Uma says, Chris, I just can't express how thankful I am for this live feed every day. I was a customs bonded warehouse supervisor and just got promoted to this position a few months ago. Because of you, I have learned so much about the trade industry, and it's good to know that there are people like us who hustle every day. I do not feel so alone. Truth. I appreciate that, Uma. Thank you for that. Like, those messages for me, that's why, honestly, it's why I continue to show up every single day. It's the messages like that, and it's the other messages from the individuals that I get who want to remain anonymous about what they're able to learn out there. Again, you guys, I just know a lot of what not to do. And, I'm in the industry. I'm actually out there making those decisions, making those sales calls, booking freight. I'm doing all of that, right? So that's where all of my stances come from, is from a guy who's just out there trying to build his dream, just like a lot of you are. But that will be it for today. Sonny Sharma, as always, another great episode. Orange Shirt Gang in the house. All right, you guys, we will be back tomorrow. As always, if you guys got value in what you heard, subscribe to the show, you guys. Share it out there to your network, because if you saw value, your network's going to see value as well. I appreciate you guys. I love you guys, and we'll be talking to you soon.